Hey everyone, Josh here, Greater Montreal real estate broker. And if you're thinking about buying, selling, or investing in real estate in Greater Montreal, one of the most important things you need to understand is how real estate taxes work over here. It's not just about the mortgage or the purchase price. There are several taxes that can significantly impact your bottom line. And that's why in this video, I'm breaking down the major taxes you'll encounter in Greater Montreal real estate. But first, let's run the intro. Whether we like it or not, taxes will always be a part of our lives, and it's no different when purchasing a property. Some of the taxes we'll be reviewing today are property taxes, the welcome tax, capital gains tax, including recent federal changes, and a few other important ones that often get overlooked. But before we get into it, I just want to give a warning that I am not an accountant, nor is this financial advice. I'm simply a real estate broker giving general information. So if you have any specific questions based on your situation, you should definitely contact an accountant or financial advisor before making any decisions. So without further ado, let's start with property taxes. These are annual taxes charged by the City of Montreal and are based on your property's municipal assessment value, not necessarily its market value. The city evaluates properties every 3 years and the tax rate is applied to that value. In 2024, the average residential property tax rate in Montreal was approximately 0.71%, although this might have varied slightly depending on the neighborhood. So for example, if your property is assessed at $500,000, your annual tax bill would be around $3,550. It's important to note that the assessed value can be lower or higher than your property's actual market value, so make sure to check your municipal assessment and compare it with recent market comparables. Also, if your property was recently renovated or upgraded, it may be reassessed at a higher value. Moving on, let's take a look at the welcome tax, otherwise known as the land transfer tax. When you purchase a property in Quebec, you are required to pay a land transfer tax, commonly referred to as the welcome tax. It's a one-time payment made by the buyer, and the amount depends on the purchase price of the property. I'll add a breakdown of how the taxes are calculated on the screen now. You can also use the online calculator based on the municipality that is very helpful at estimating the costs as well. As an example, for a $600,000 property in Montreal, you'd be looking at roughly $8,000 in welcome tax. This tax is payable within 30 days of receiving the city's invoice, which usually is received about a month after purchasing a property. So make sure to budget for it when you're planning your next purchase, especially if you're buying a more expensive home or an investment property. I just want to quickly interrupt this video to remind you that this year I have the goal of reaching 5,000 subscribers on my channel and becoming a go-to real estate resource. So if you're watching this video and haven't yet subscribed to my channel, please take a second to show some support and like this video, subscribe to the channel, and turn on the post notifications. Your support means a lot and it goes a long way. Now, back to the video. Now, let's go over capital gains tax. This applies when you sell a property that is not your principal residence, like a rental property, a second home, or a flip. In Canada, capital gains are taxed by adding a portion of the profit to your taxable income. Currently, 50% of the gain is taxable. So if you bought a property for $400,000 and sold it later for $550,000, your capital gain is $150,000. Under current rules, $75,000, which is 50% of the capital gain, would be added to your income and taxed at your personal marginal rate. However, there's an important update to be aware of from the 2024 federal budget. The government announced an increase in the capital gains inclusion rate from 50% to 66.6% for all capital gains realized by corporations and trusts, and for capital gains of individuals exceeding $250,000 in a given year. This change was originally scheduled to take effect on June 25th, 2024, but has since been deferred to January 1st, 2026. So starting in 2026, if you're an individual and your total capital gains in a year exceeded $250,000, any gains above that threshold will be taxed at a higher rate. Therefore, 66.6% of the gain would be added to your taxable income instead of 50%. If you're a corporation or a trust, all gains will be taxed at that higher rate regardless of the amount. One thing to keep in mind is that your principal residence is still fully exempt from capital gains tax, as long as you have lived in it as your primary residence for every year you've owned it. However, if you're selling a property that has been rented out, even for part of the time, capital gains may apply, so be sure to consult a tax professional if your situation is complex. Now let's look at some other taxes and things to consider. Number one, GST and QST on new construction. If you're buying a new construction or commercial property, the purchase is subject to GST 5% and QST 9.975%. And this can significantly increase your upfront cost. However, if the property is priced below certain thresholds, usually under $350,000, you may be eligible for partial tax rebate. Number two, rental income tax. If you're earning rental income from a property, that income is fully taxable. The good news is you can deduct many expenses such as the mortgage interest, property taxes, repairs, maintenance, insurance, and even property management fees. So to conclude, navigating the world of real estate taxes in Montreal can feel overwhelming, but understanding these taxes upfront will help you make better decisions in the long run. From annual property taxes to land transfer taxes and capital gains, every decision has a financial implication. And with the new tax changes coming in 2026, investors especially need to stay informed and plan strategically. With that, this week's video is officially over, and I want you to comment below what's one real estate tax you were surprised to learn about today. Let me know in the comments, and I'd love to hear your thoughts or experiences. If ever you're looking to buy or sell a property in Montreal or its surrounding areas and have any questions, send me a message or an email and I'll be happy to help. You can find my contact information in the drop-down menu right below this video. And if you got any value from this video, don't forget to like this video, subscribe to the channel, turn on post notifications for more real estate content like this in the future. And as always, I'll catch you next time.